than I had hoped. What happens is that because the assessment of your residential is almost double the amount of your non-residential, by increasing your residential by only 0.35, you're still decreasing by over almost 6.65 for the non-residential, bringing it down to 19.5. And I didn't do the first page because I wanted you to see this before if you wanted to do any other scenarios before I completed page 1.
Looking at this, it's saying that at the top of the page, it says consolidated residential rate is 12.56 and the non-residential is 18.81.
Correct.
So that is saying that that would be the tax rates for 2016.
Correct, and that's what would be published on the website and everything else. The under levies and over levies and stuff are always in the next section. They are not taken into consideration on the municipal website.
Yeah. And so the residential people in this example would be taking up part of the under levy.
A little bit, 0.3 worth, right?
But they were going to be doing that anyways because there was that one education for the seniors in Recplex, that did have to come out of there.
Oh, okay, that was their part, so they had
Yeah,
to take that.
a little bit, yes.
Okay, gotcha.
So that's the difference between 12.56 and 12.68, so very minimal for the under levy. The difference between those two has pretty well not changed compared to the previous options.
I think in theory it looks really good. What is the price tag for the residents then?
What it boils down to is that for the difference that we've just done scenario-wise, for every 1,000 of assessment, it's going to go up $35. Or, I'd have to look, 35 cents. No,
Yeah.
35 cents.
Now you got our attention.
Yeah, for 35 cents.
Yeah.
So basically, if your house is worth 100,000, then it would be $3.50 or whatever. It's very minimal. $35, yeah. I need my adding machine.
Yeah.
That's residential, is that across the board?
Not,
It's a reduction in commercial.
That's just well, not a reduction in commercial, a reduction from what we were looking at.
35 cents per 1,000 is strictly just residential?
Yes.
What is it for the commercial?
It'll be down 0.6 instead of going up 0.35.
so every 100,000 that they're assessed, it's $60. Less.
Yes.
So I think what you were saying before is what we can sell to the people is, number one, this wasn't our screw up. First and foremost. And
List the screw ups. So
the
that we
list
see
of
what we have to
screw-ups.
deal with. No, seriously.
Exactly.
Put the gift in it,
The guilt.
the guilt in there. Lay the guilt on twice.
Yeah.
Guilt and then this linear assessment mistake and then the education mistake there.
Yep.
And just say, you know what, we have
These
to
are-
deal with it.
these are-
And this is what we've done it. We've eaten this much as we can because we don't want our people, we value our people enough that we don't want to
Yeah,
do this.
and then we've ate the 160,000. We have to collect the 50,000. It's a requirement of the government to balance that. And so yes, the tax rate will go up because of this error that was shown last year, and explain it. And I think we move on after we explain it, and we've got it balanced as best we can. Plus, we're going to, eat a little bit more of that money another 90,000, right? That's what we're saying. we're eating another 90,000 in option 3. Basically, we're reducing our, our money by 90,000. Or option 5. So I think all of those things, if we spell it out, if there's going to be a slight increase, there'll be a good increase to the commercial, but that can't be avoided. There's no way to avoid it.
And that's what we've done about the CAO.
That's my take.
Before or
on it.
after
I
we
like
do
it.
your appraisal?
Yeah.
I'll change to option 5.
Vern?
Well, option 6.
I did a quick calculation on the large commercial based upon what I know about that one, and it would lower their municipal contribution by almost, roughly $2,800.
So based on our example,
Yeah, based upon what I know of that particular one, it lowered it by about $2,800. The municipal portion only, right?
well, $2,800 is $2,800.
Absolutely.
Which portion it's on, it will be on the total, right?
And you know what, they're gonna have to pay that additional 2,000 and some in the under levy, but at least that comes close in the next year.
Covering the,
Their tax isn't going to change that much next year, right? It'll help to balance that off.
Because maybe we should tell them that we're the ones taking the bite, and they, the ones that we are out of our control, that they have to pass on to them. So it makes us look even better, because their increase as such, if there is one over last year, is because it's out of our control.
Vern, did you have something?
And in the comparisons that I quickly just ran off there, that puts us right in the ballpark with most of them.
Sort of in the mid-range again, or?
Roughly, yeah.
Residential or
Both.
commercial? Both.
If you look at, I've got Hannah and Valley View in there, and
What's Valley?
Valley View's 8 for residential, and I think 14.1 for commercial. And I would assume, based upon the MDs from last year, they're just a second.
For the county, when I was speaking to Big Lakes the other day, they said that their mill rate that they were presenting to council, whether that passes or not, the mill rate they were presenting for residential was going to be 4.25, same as last year. Whether that passed or not, I don't know.
I had the MDs one here.
Like what would ours be without the levy? Or the mill rate? 12?
Can't compare counties with urbans. Urbans and rurals are always very,
But
very,
that's still significantly over Valley View then, Vern. Right?
What's that?
That's significantly higher than Valley View's though.
Which is?
Didn't you just say it was 8?
I think it's
Valley
8.0, right? Valley Views? For residential.
And ours is,
And under
and ours is 12.5.
ours is 12.5 with the levies,
That's what I
consolidated.
said, so what's ours without the levies?
9.025.
Thank you, sorry, okay.
It's on the top of your sheet. I
Which
just gave you.
sheet?
Oh, okay, wait.
The one I just gave you.
You can only look at the municipal portion, you can't
Oh,
look
this-
at the consolidated.
Okay.
Oh, okay, I'm sorry, look at the consolidated.
Yeah, so do I.
Okay.
And the business one is fairly similar to everybody else, right?
Yeah.
Yeah, the
And if
business
the
one, if you look on it here, is 15.
14.08.
I think we got her. Looks good.
And if we can
And
get
I
some of those developmental contracts into
Just need to,
reality,
yeah,
then
get
as
some,
we go forward.
yeah, more assessment in High Prairie, yeah.
But
Brian?
Well, I was just gonna say, okay, we've got one motion on the floor, do we wanna vote on that and then make another motion?
We'll need a break to do the proper motion, plus we'll have to amend the operating budget, those 3 line items, but to equal the 92,000. which I can give you the line items so that we can reduce.
Well, can we put that tomorrow then? Or, that's not tomorrow, it's Tuesday, so.
I'm hoping that you guys will do both second and third reading at this meeting so that we could get the stuff into our system and get started. Because it takes a week to put it into our accounting system, do the testing, everything else before we can even print next week. So,
If everybody's in agreement, I'm comfortable doing it tonight and getting it over with.
You guys all ready to do that? Okay, so do you want to vote on the motion that's on the floor and then have you guys go and prepare?
Take a break and then.
Or
Well-
rescind the motion.
Rescind the motion up for information? That was the motion, right?
yeah.
We still got it. We can receive, we can vote on that motion and then send administration to prepare
The wording.
the wording for the next motion.
Okay.
Okay? All in favor of receiving for information? No.
Oh, yeah.
Yeah, we're gonna receive it for information. It doesn't, yeah. And then are we taking a break to do
We have to
this?
take a break where they get it all.
Yep.
ready.
Okay, we'll give you guys another 10-minute break.